Welcome to today's webinar. I'm Mike Payne, and your host for today is Jennifer Lang. Jennifer is an author, a speaker, and a licensed financial services professional who found her love for financial literacy the hard way. Her career goals were on track as she tackled the hustle and bustle of working in New York City as a corporate manager. That is, until life threw her a curveball that would change her direction. Her mother became ill, and Jennifer only had one choice. She left New York and became her mother's full-time caregiver. It was during this 10-year period that Jennifer learned firsthand the importance of how life insurance protects an individual and a family while they are alive, as well as how having essential estate planning documents can empower family members and relieve burdens. She found a new passion and purpose to help the underserved middle class protect against the emotional, physical, and financial stresses of caring for their loved ones. Currently, she works with businesses and families in all 50 states to acquire business loans, life insurance, and annuities. She is contracted through One Resource Group, and you can contact her through her website, wfginsurancequotes.com. So, without further ado, Jennifer, take it away.
Thanks, Mike. I'd like to welcome and thank everyone for attending today. My name's Jennifer Lang, and this webinar is being recorded and will be available for rebroadcast later on. So please submit all questions via our website, wfginsurancequotes.com, or you can email me at info@wfginsurancequotes.com. Tell me your name and where you're from, and I'll get those questions answered. Today's webinar is entitled, Do You Have the Right Mortgage Protection Insurance? And as Mike mentioned, a person can either learn things the easy way or they can learn things the hard way. And in my case, when my mom got sick, I learned things the hard way. I, like most people, thought that life insurance was just something you had in order to pay for a funeral. I didn't know that there were certain policies that could actually help you while you're alive. So I do these webinars and I speak to businesses and organizations because I want to help as many people as I can reach their hopes and dreams and avoid those financial learning curves that I went through. So let's jump in. As I speak to people, I've found that many homeowners are confused about the difference between PMI, which is private mortgage insurance, and mortgage protection insurance. The two are very different, and it's important to understand the distinction between them. It's not uncommon for homeowners to mistakenly think that PMI will cover their mortgage payments if they lose their job, become disabled, or die. But this isn't the case. PMI is designed to protect the lender, not the homeowner. Mortgage protection insurance, on the other hand, will cover your mortgage payments if you lose your job or become disabled, or it will pay off the mortgage when you die. This short video will discuss some of the differences.
Mortgage protection insurance versus homeowners insurance. Buying a house is both a big commitment and investment. So it is important to make sure you're protecting yourself from unforeseen losses through insurance coverage. If you're like most people, you probably have questions about the different types of insurance products available for homeowners. Let's face it, if you're not in the insurance industry yourself, it can be a little more than a little confusing to understand the benefits of different insurance plans, and what you need to effectively protect yourself. In this video, we'll explore two common insurance products, mortgage protection insurance and homeowners coverage, to help clear up some of the confusion about what they are and what they do. If you've taken out a mortgage to buy your home, you may be wondering if you need to buy mortgage protection insurance. Don't confuse this type of insurance coverage with private mortgage insurance, or PMI. PMI is a product that protects your lender in the event you default on your loan, and may be required if your down payment is 20% or less of the purchase price. PMI does very little to protect the homeowner. and is there instead to protect your mortgage lender. Mortgage protection insurance, sometimes called MPI, is a different product that can kick in to protect you as a homeowner if you are unable to make your mortgage payment because you lose your job, become disabled, or pass away. Simply put, MPI is there to protect you and your family if you cannot make your payments. Understandably, different insurance companies offer different mortgage protection insurance products. But generally speaking, mortgage protection insurance is designed to pay death benefits. Homeowners insurance. While mortgage protection insurance is generally optional coverage, homeowners who have mortgages are usually required to purchase a minimum amount of homeowners insurance on their home. Homeowners insurance protects your home from damage to the structure and its contents, and protects you as a homeowner against legal liability if someone is injured in an accident on your property. There are several different components to homeowners coverage. Some of the most important elements include: coverage protects against losses from things like fire, wind and hail. Talk to your insurance professional about how much coverage you need for the home itself, for garages, sheds, fences and other structures on your property, and for your personal property. Additional living expenses coverage may be available to pay for expenses you incur because your home is not inhabitable for a period of time after a covered loss. Personal liability coverage protects you if someone is injured on your property, and may cover damage you cause to someone else's property. Medical payments coverage can kick in to pay medical expenses for someone else who is injured at your home. We hope you have a better understanding now of PMI versus homeowners insurance.
Mortgage insurance, also known as mortgage guarantee and home loan insurance, is an insurance policy which compensates lenders or investors for losses due to the default of a mortgage loan. Mortgage insurance can be either public or private depending upon the insurer. In addition, as an income earner, you would also want to make sure that your individual mortgage protection insurance policy replaces your income and takes care of your family should anything happen to you. Generally, your mortgage protection coverage reduces over time as the amount you owe on your mortgage goes down, and this is called reducing term coverage. It is the most common and the cheapest form of life coverage. The next step up is a level term policy, and this gives you the same amount of life insurance coverage throughout the mortgage term. It is usually used for an interest-only mortgage or an endowment mortgage, where the original mortgage amount is still owed until the end of the mortgage term. But you can also use a level term policy with a traditional decreasing mortgage. This means you'll have more life insurance coverage than is needed to clear your mortgage at any point in time, so the extra benefit would be passed on to your dependents if you were to die. Now, if you wish to, you can add serious illness coverage to your mortgage protection policy. And this means your mortgage will be cleared if you die or if you are diagnosed with a serious illness that is covered by your policy. But your premium would be a little higher if you choose to add serious illness coverage to your policy. While the specific benefits and features of mortgage protection will depend largely on the plan and the insurance company offering it, this type of insurance functions much like other life insurance policies. You pay premiums to the insurance company to purchase a specific amount of mortgage protection coverage. Those premiums are based on your attained age and your health, as well as the value of your home and the payoff amount. Certain policies also offer a unique return of premium feature that provides a refund of all of the premiums you paid into the policy at the end of the policy term. So you can have the life insurance coverage you need and get a refund if you don't need to use it. I've got a question that came in. It's from Daryl in Virginia, and he writes, "Hi, Jennifer." Hi, Daryl. "My wife and I are currently looking at houses. When should I buy mortgage protection insurance?" Very good question. If you have a mortgage on your home or you're in the process of obtaining a mortgage, that's the time to reach out and get your rates locked in. None of us know when we might become critically ill, become disabled, or, God forbid, die prematurely. So the sooner the better. At the end of the presentation, I'll show you guys how you can run your own rate quotes and apply all on your own right when you're ready. Sound good? Excellent. Very good question. I think the best way to view life insurance is as a form of risk management, because we all take risks in life, even if it's just driving to work in the snow and rain. So you can use life insurance to hedge your bets, so to speak. If someone depends on you financially, a sudden loss of your income could have catastrophic results. Dealing with the death or disability of a loved one is already emotionally challenging. Adding financial stress can create an unbearable situation. And if your family couldn't continue making payments or pay off the mortgage from other sources, they may not be able to stay in the home. Mortgage protection provides peace of mind, knowing that your family wouldn't lose their home even if the unthinkable was to occur. So when you're buying mortgage protection insurance, you want to look at 5 key points. First, you want to make sure that the policy comes with a level death benefit, not decreasing. You want the death benefit to remain a constant dollar amount for the term period. And this is the best option for those who want to provide income replacement and pay off their family's future costs. Things like the mortgage, a car loan, or college tuition for your children. Second, you want to make sure that you have a level premium. Premiums are designed not to change. And then third, you own the policy, not the lender. Fourth, you name the beneficiary, and the beneficiary is not the lender. It's your spouse, it's your children, but it's not the bank or the lender. And then fifth, it's portable. The plan will follow you from loan to loan, house to house, and other plans will terminate when you sell or refinance your home. The following video gives us a recap.
3 benefits of buying mortgage protection insurance. If you are like many people, your home is the most important thing you own, and a good chunk of your income probably goes to pay the mortgage every month. What would happen if your income wasn't there, because you died prematurely or became disabled? Would your family be able to continue making mortgage payments, so they wouldn't have to be uprooted? Mortgage protection insurance is designed to offer you peace of mind, knowing your loved ones could stay in the family home without worrying about where or how to come up with the next month's mortgage payment. Here are some of the top benefits mortgage protection insurance offers. 1. Affordable. Mortgage protection insurance is a type of term insurance. Because it's not designed to provide lifelong protection, it's generally affordable. The actual premium you pay will be based on the amount of coverage you need, your age, whether or not you smoke, and your general health. Generally speaking, it is easy to qualify for mortgage insurance. You may not need to undergo a health exam, unlike more traditional life insurance products. 2. Protection in the event of your death or disability. Basic mortgage protection insurance offers coverage in the event you die while you still have an outstanding mortgage balance. With many policies, you also have the option of adding coverage that would make policy benefits payable if you were alive but disabled. In the event of a disability, policy benefits would be paid directly to the mortgage company. For people who work in high-risk jobs, who may not qualify for other disability insurance products, this feature of mortgage protection insurance can be a significant benefit. 3. Available benefits when your loved ones need them. Even if you pay off your mortgage early, you get to keep the insurance protection for the full policy term. If you die while the policy is in force, benefits go to your named beneficiaries, who can use them to pay off the mortgage, or for any other purpose. Moreover, as with other life insurance benefits, they are usually income tax-free. Mortgage protection insurance makes sense for many people. To learn more about the benefits, features, and options available with mortgage protection insurance, contact the experienced insurance professionals at wfginsurancequotes.com. We'll work closely with you to determine which product might best meet your needs. Then, we'll go to our network of more than 200 well-known insurance carriers, to find coverage options that will protect your loved ones, while staying within your budget. At wfginsurancequotes.com, we understand the financial strain that an outstanding mortgage can leave when the unthinkable happens, and we want to help your loved ones avoid losing their home. Mortgage protection is just one of many types of insurance coverage we can help you purchase. We represent more than 200 different insurance carriers. This allows us to truly be independent, and to help you find an insurance policy designed to fit your needs and your budget.
You'll see that mortgage protection insurance in many ways is a game of strategy. It's not just a matter of simply finding the best rate. You want to find the best coverage for you at a rate within your budget. Each person has their own unique situation. So there are 4 strategy options to consider. Option 1, do nothing. But if you love your family, this really isn't an option, because it's really not about you, it's about them, and making sure they don't suffer a financial hardship. Option 2, you can cover the entire amount of the mortgage. Then there's option 3. Cover a portion of the mortgage, say 25%, 50%, or 75%, so the loan can be recast. Recasting is also known as re-amortization. Mortgage recasting is an option that allows homeowners to lower their monthly home loan payouts without changing their mortgage interest rate or terms. The surviving spouse would make a large lump sum payment toward the loan principal. Lenders usually require $5,000 or more to recast a mortgage. The remaining balance is then amortized to reduce the monthly payments. Recasting not only results in lower monthly payments, but borrowers will also pay less interest over the life of the loan, and thereby it shortens the loan term. So this strategy reduces the monthly payment so the survivor can afford to keep the home and still have funds to live off of and invest for future income. Option 4 is a critical period coverage. it provides the family with 1 to 5 years of payments so the home does not have to be sold in a fire sale situation. If the breadwinner dies, the bank only wants the next month's payment, not the full amount of the loan. So let's get into the fun part. I'm going to share my screen and we're going to look at rates and apply strategy options 3 so we can see how all of this works. Okay, I hope everyone can see my screen. I've logged on to wfginsurancequotes.com and we're going to click on Financial Services and click on Mortgages. And that will take us to the Mortgages page. We've got some information here that's helpful, but we're going to scroll down to the bottom. This is where our quote tabs, or where we can access our quote tabs. On the right here, we have return of premium, also known as ROP in the quoting system. So if you are curious about what the return of premium rates would be, you can just click on that and it will take you to this page. It automatically drifts down, so you can easily go up or down from here, and you would just enter your information and proceed through the system as it directs you. Okay, and if at any time you need help or you would prefer an agent to run the quote for you, you simply click on this button. It'll take you to this screen where you can fill in your information down here at the bottom and request a free no obligation life insurance quote. I work with 4 other agents and together we're able to service all 50 states. So regardless of where you are, we're here to help you. All right, but we're going to go back to the previous screen, and here we're going to run a level term policy, which will take us to this page. On this Lightning Issue platform, the carrier is Fidelity Security Life Insurance, FSL, and this is their information. And so it's a simple quoting engine. It's not complicated. You can read the information here about how a level term policy works. Right here you've got information on the decreasing death benefit, but we're going to do the level death benefit because we are going to use strategy 3, option 3. So we're looking to get a life insurance policy up to $150,000. All right, so simply enter in your zip code, your date of birth, (1984), female. Have you used any tobacco in the last 12 months? That would be no. Do you have any existing life insurance or annuity contracts? That would be no. Will the insurance coverage applied for replace or change any existing life insurance or annuity contract? The answer is no. Those are all the questions it needs right now. It proceeds through. And we scroll down, and here is my quote. For $150,000 of coverage, my monthly premium would be $18.88. I like it. Now, if you would prefer the decreasing death benefit, here are your rates. Okay, but I'm going to go with a level death benefit because I don't want the face amount of the policy to go down. I want my loved ones to get $150,000. So at this point, it's just a matter of you choosing which face amount you prefer. If you prefer a $50,000 policy, the monthly premium in my case would be $6.29. And these premium amounts are based on gender, age, and smoking only. It doesn't take into account any medical conditions that you might have. So this is the first quote that I'm getting in regards to just my age, gender, and non-smoking rate. But if I prefer $150,000 or $100,000, these are the premium amounts that I can select. So I'm going to choose $150,000. My monthly premium so far, if I get approved at this rate, is $18.88. And I'm going to click apply. And from here, you're able to read the information regarding the policy. You must be between ages 18 and 65. It's a 20-year term policy. All right, so this is the specific information, and if you need to speak to the carrier about any of the plan information, this is the number to call right here, 1-800-648-8624, and you can speak to a Fidelity representative specifically about the policy. All right. From here, it's just a matter of entering in your information. This is a live platform, so I'm not going to enter any information in, but once you click continue, it'll take you to the application. Once it's submitted, you should get an instant approval, or if it has to go to underwriting, it'll let you know. Once you get an instant approval, you'll receive your policy within 7 business days. That's not bad. All right, so this is a very quick, that's probably why they call it lightning issue. It's their system, but it's a very quick, intuitive platform that'll give you a policy, a great rate, and you can get coverage for your loved ones, easy peasy. The benefit that comes with, or an additional benefit, I should say, that comes with getting a policy from Fidelity is they offer a scholarship program along with their policy. So once your policy is submitted and it goes in force, you'll automatically be enrolled in the scholarship program. And so from financial services, you can just click on scholarship program. It'll bring you to this page and you can read and go over the scholarship information. So with this first application, this first policy, you're automatically going to receive 500 college scholarship points, which equals $500. So you're going to get a $500 scholarship to a private college that's enrolled in this program. And from here, you can click on, I believe, yeah, you can click here and it'll give you the list of colleges that are partnering with the Tuition Rewards program, member colleges and universities. All right, and so you can just go down and see which universities are participating in the College Rewards program. This is great, and pretty much you'll be able to read, but the way it works is that you'll earn points twice a year. So that's $1,000 in college tuition you'll earn every year for just keeping the policy. So if you get a 20-year term policy and you keep it for the 20 years, then that's $20,000, not including the $500 for when you just got it. So that's $20,000 in college scholarship rewards points that you get for enrolling in the college scholarship program and for getting a policy with this carrier. So it's a 1-2 punch. This is a quick video that explains and goes over everything.
As life insurance clients, we all know how time-consuming and problematic buying life insurance can be. With lengthy medical questionnaires and underwriting processes, the benefits rarely seem to outweigh the challenges. But we have the product to solve this problem. Welcome to the new Lightning Issue Term Life Insurance, the first ever term life insurance product with instant online approval and a full online e-application process. It's never been this easy to buy life insurance. Lightning Issue Term Insurance is offered by an A- rated carrier. Lightning Issue Term rates are unisex and unismoker with just 3 medical questions. Everyone between the ages of 18 and 64 is eligible for coverage for up to $100,000 in death benefit and from 10 to 30 years of guaranteed term coverage. The e-application contains only 5 questions and can be completed in minutes. You can pay ongoing premiums by credit card or checking account debit, and you receive a free $5,000 scholarship to any one of our 340-plus colleges across the country. After a brief electronic application, you receive an instant approval. The average application process takes less than 5 minutes. It's as simple as entering the zip code, date of birth, and selecting the death benefit. Policies are mailed to your doorstep within 72 hours. We know that buying life insurance can be difficult, and we want to help you simplify that process with Lightning Issue Term. Contact your Lightning Term agent to learn more.
Here's my contact information, and if you need me, I'm just a phone call or click away. Until next time, thanks and have a great day.